Hi, student. This week it's a special week because we're gonna start talking about cryptocurrency. That something we all like to talk about it. We covered the technology. Now we're gonna talk about cryptocurrency, the story. Well, the outline of this week lecture is definition of cryptocurrency. What is that cryptocurrency? Key stops, explaining how cryptocurrency work versus, for example, Facebook or Instagram or TikTok. What are the crypto products, coin versus token? What are the difference? And the most important thing is how to evaluate a crypto. Now, in the stock market, I teach how to evaluate Apple or Microsoft or any equity company. But the crypto is different way of doing that, because companies in the stock market, there is equity, they have earnings. Crypto doesn't have earnings. And then we're going to have a crypto key open questions, and then questions about the chapter as homework. Well, what is that, a cryptocurrency? A cryptocurrency came from the word cryptography. Cryptography is a computerized database using strong cryptography to secure transaction record, to control the creation of additional coins, and to verify transfer of coin ownership. This technology, cryptography, allow us to have Bitcoin and other coins that we have now, because now you cannot do the double spending. Double spending means if you have a 5 coin and you buy with 6 coin, and you can buy 3 coin here, 7 coin there, nobody knows what you're doing. But now with the cryptography, there's accountability, and then there is no double spending problem. Cryptographic key features, here are the 4 of them. Pre-image resistant, collusion resistant, landslide impact, which is a small change of input X change hash, and puzzle friendless, for even with partial knowledge of the input X and complete knowledge of Y hash, it would continue to verify hard to find the rest of the input X. So here, when we say hash function is important because you have a key, digital key. So when there is a transaction, your key with the blockchain key together, they will be hashed, and we have a transaction number that will be verified. That's a cryptography. What are the key conditions for existence of crypto? It's 2 conditions: unique and unlimited. Unique and unlimited. Here's an example. After World War I, Germany, they put some, they have to pay all this war cost. I'm talking about 1925, 23. Germany has to go and pay all of this World War I to Europe, France, US also was involved. As a result, Germany doesn't have enough money. So they were printing money, it has no value. So if you want to buy a 1 pound of tomato, you have to get a lot of German marks and go to find before the euro, go to buy this. So what was the problem is unlimited. Like the inflation in Germany every day was 100 to 200% every day. So it has to be limited for a coin to have a value. It has to be limited. Like the system doesn't generate a lot of coins. And unique. Unique means the blockchain has a good story and good technology that help for this coin to be valuable. So the key difference between crypto and Visa, crypto or PayPal or MasterCard, is the proof instead of a trust. When you go to King Super or Whole Food or Costco, for example, I just came from Costco. I finish my basket and I put my credit card, and then I have to wait a few seconds, and then the system say approved, and then I get a receipt and I left Costco. What happened there? I didn't give them any dollar to Costco. I just give them the plastic card. The plastic card says, "Don't worry about Yosef. I will take care of the money. If Yosef doesn't pay, I will pay that." So Visa, basically, Visa card, it's a trust. So when you buy a basket in the cashier, when you give the Visa card, that means Visa committed to pay for Costco. Now, if I did not pay for Visa the credit, or I have a lot of debit in my Visa, that's not Costco problem. Like Visa cannot go to Costco and tell them, oh, Yusuf, he has a cannot pay, so give us the money. No, once it says approve, Visa has to pay the transaction. So this is called a proof. So a trust, like you have to trust Visa. In the crypto, we have a proof. Proof, that means between a sender and receiver, the hash function prove that there is no double spending, and then we have the transaction verified. What's the difference between crypto or Instagram, or crypto or TikTok or Facebook, Twitter? In Facebook or Instagram, for example, user create a post, you write a post, Facebook server verify the post gets saved in Facebook database. All other users of the network can now see the post and then give you a like or things like that. In the crypto, we have a similar stages, but different process. What's the difference? When you are on Facebook, that means it's centralized. This is a Web2 technology. That means I am on Instagram, you are on Instagram, we both meet on Instagram. So Instagram is centralized. In the crypto, it's different. User create transaction, miners verify the transaction, transaction get put into block and it added to the blockchain. All other nodes can now see the transaction. Now, there is no Facebook, there is no Meta. When I send you money, somebody verified, and that's it between you and I. But their database, the blockchain database, report that Yusuf, this key with this key, they have a transaction, and this is the hash, and that's it. So here you have, in order to do a post and people like your post or not, you have to go to a centralized Facebook or Instagram or TikTok. Here you didn't need to have a TikTok or a centralized anything. History of crypto, I'll go fast. In 1983, David Quam created something called electronic cash. Now, a lot of people think David Quam is Satoshi Nakamoto. In 1995, David has another e-cash idea. In 1998, a new cryptocurrency hit the street by the name of BitGold. In 2008, which is 10 years after, the first decentralized cryptocurrency by the name of Bitcoin was created by an anonymous developer. His name is Satoshi Nakamoto. A lot of people think that nobody exists with this name, Satoshi Nakamoto. It is David Quam. It is Satoshi Nakamoto. From 2009 to 14, the first milestone of cryptocurrency and Bitcoin happened, and we talked about the emails, about the two pizza. And then 2014, Bitcoin is split into two due to internal disagreement. Bitcoin is then banned in China, and the first Bitcoin ATMT was launched in Canada. There is more history. Crypto starts to gain real popularity in 2016 and become to be a real form of payment as companies like Uber start to accept it. 2020, Bitcoin halving rate occurs. Halving, that means the supply of Bitcoin become to be less supply, like halved. Instead to have X amount, become to be X divided by 2 supply of Bitcoin at 62.25 BTC. So here's a summary of the history of crypto, DigiCash, Monday Cash, Cyber Cash, and NextZebo. Some people think NextZebo is at Satoshi Nakamoto also, BitGold and others. The reason for failure of this currency, as I said, is double spending. Double spending, I talked about it a few minutes ago. Double spending means the following. Again, when I go to Costco, if suppose I have a $5,000 my credit limit in Costco with Visa, $5,000. If I pass my limit, if I go to Costco, I want to do the transaction, Visa say, yep, boom, you're out. You cannot do the transaction. And Costco said, where is the money? I say, here's the card. I say, but the card rejected. So I have to have something. In these attempts, we have a problem that if you have, like, for example, 10 coin, you can buy with 3 here, 4 there, 6 here, 2 here, 7 there. And you can come buy, spend. But the receiver of the coin, you buy from them, they don't know how much coin do you have. So this is double spending. You can spend more than what you have. So in Bitcoin, solve this problem. And here I have example about Bob. And the reason for failure, as I said, market adoption. And we want to centralize and consensus. List of digital and mobile payment. We have a lot. PayPal, Starbucks have, Google Wallet, Apple Wallet. And now we're going to talk about the economics of crypto. So how crypto has a value, unique, unlimited. What was the problem? Even if it's unique and limited, you want to make sure that there is no double spending. If you get unique and unlimited, that means there's a chance people might use your coin. But you need to make sure that if people start using your coin, there is no double spending. So Satoshi Nakamoto solved this the double spending. And now we're going to go, okay, now we have a coin that's unique, limited, and there is no problem with double spending. Then what's the economics of crypto? Fees, money supply, and global conversion. Fees, like as of now, when you do a transaction, Visa charge Costco 2%, 1.5%, or 1%. I don't know what's the deal between Costco and Visa. Every transaction, when you use Visa or MasterCard, there is a fee that the merchant, the seller, give it to the credit card company because they use the trust. Now that's one type of fee, but also there are other fees different. Like for example, the swap. Like any transaction, bid, ask, and spread, there is fee. Money supply, and that's important. I have a book about Federal Reserve Bank, and in that book, I show that when the money supply increased, when the Federal Reserve put money supply, increase the money supply, like in 2020, the Federal Reserve increased $3 trillion, and from there is another 2 or 4 trillion. When the Federal Reserve give money in the market, the wealth inequality increased, and the top 1% hold a lot of cash, a lot of wealth. So why? I was asking myself, why when the Federal Reserve do quant easy or quantitative easy or soft monetary policy, lower the rate, increase the money supply, why that increase the wealth inequality? And then I understand that the reason is this money are not going to the poor. This money going to big corporations like banks and others to use this money for mortgage, for loans, and this, and they get a spread. So when you increase the money supply, the business increase for banks. So these banks, the money supply by the Federal Reserve, by the way, if you're American or you live in America, legal resident, the money supply of the Fed is your money. It's not JP Morgan money or Morgan Stanley or all of these banks. This is your money. When the Federal Reserve give money to the market, if it's a fair world, like if they want to inject 1 trillion, so everybody should get a piece of that. Depends on your size in the population. Like one person will get something, and if the household 2 people, will get 2 pieces. But as of now, no. When the Federal Reserve inject the money, they give it to the rich, to the banks. That causes wealth inequality. In the crypto is different. In the crypto, so JP Morgan, Morgan Stanley take the money from Federal Reserve. They don't work hard. They just get the money, they pass it, and they start giving loans. In the crypto, you have to earn the money. How? You have to be a miner or verified transaction. So the supply of money going to the people who work for it by doing the proof of stake or proof of work or any consensus mechanism. That's a critical. And with the crypto, there is less wealth inequality because the rich didn't have an easy access to next Bitcoin. No, it's not like Bitcoin giving 10 Bitcoin and give it to the rich or do something with it. No, Bitcoin say you have to earn the new coins, and to earn it you have to be a verifier to verify transaction. You have to work either proof of work or proof of stake. So money supply in the crypto, you have to earn it. In the real world, Federal Reserve, you didn't have to earn it. All you have to be is to be a rich and bank, to be a bank and rich. And not all banks, by the way, getting money from the Federal Reserve. And then the third point about the economics of crypto is conversion. For example, most of the economies as of today are international-based economy. There is international trade. And we saw the war between Russia and Ukraine, how the wheat become to be expensive. When any two countries making a transaction, they have to decide on the currency. For example, if China is selling a product to Spain, well, they have to say, well, China is yuan, Chinese currency, Spain is euro. Well, they have to decide how they're going to do the transaction, in euro or yuan or in dollar. Now, before in gold, give me 1 pound of gold, I give you those. Now gold is gone. Suppose, usually in dollar, because the commodities market is in Chicago, CME. So for that to happen, China has to transfer the yuan into dollar. Sorry, Spain in this case. Spain has to transfer the euro into dollar and give it to China. China take the dollars, transfer it to yuan, and give it to the supplier, the people who export in China. So you have a two conversion of currency from euro to dollar, dollar to yuan. In a crypto, and that we call spread here between two transactions. I call that fees, but this is a conversion, it's different fee. And then that's a big money. We're talking about 6 trillion transaction a year of different currency. And there is a big market called swap, for example. Swap. And why this will solve the swap problem. For example, Apple, if you have a smartphone, an Apple or any company, a smartphone, this is Apple is made in America. People think it's made in America, it's an American company. No, that's not true. This smartphone that you have, it's 15 countries involved in this. 15 countries, Vietnam, China, and other countries. Okay. Now, how many customers buy Apple? About 160 countries buy Apple products. So every country has different currency. So Apple, basically, a banker, have a lot of customers buying for Apple products, and they pay in their currency. Like, for example, if you are in Saudi Arabia, you have to pay in Riyal. If you are in Egypt, to pay a pound. In Jordan, a dinar, a pound maybe. In Israel, shekel. In Turkey, lira. In euro. In China, yuan. In Vietnamese, they have their currency. In Russia, ruble. In Ukraine, hryvnia. So Apple has a basket of currency. So what to do with this currency? What they need a dollar, because they're headquartered in America. So they have to converge all of this currency. Now, wait a second, we're not done. Apple has also workers in different countries. Like Apple has a lot of workers in China, and they have to pay them in yuan, in Vietnam, in these countries I just mentioned before. So Apple has to do conversion from client to headquarter, to the dollar, and report the revenue. But also they have to pay workers in different currency. So sometimes the currency in each country going down, up and down, 10%, 5%, things like that. Like the Russian currency went actually become to be stronger, ruble, after the war in Ukraine started. The ruble became to be strong, actually. People thought the opposite. Okay, now if you pay for Russian workers, it's going to be very expensive for Apple to pay for Russian workers. But if they have a swap, they will have no problem. If they have enough of ruble, Russian ruble, enough, then they say, okay, I already have the ruble. Yeah, no problem. If the ruble become to be strong, the same salary for me. But to do that, you need to do swap. Swap means here are the two currencies. If one of the currency going up or down, I don't care. I'm going to swap it for this price of today. So this is a conversion. Now, if you have a one coin world, one world with one coin or one world currency, we're done. There is no conversion problem. Crypto products, there are two products, coin and token. The difference between the coin and token is a blockchain. In a coin, the coin has its own independent blockchain, a network. The token is you use existing blockchain to make a token for yourself. For example, Ethereum is a blockchain, and the Ether is the coin. But you can create a lot of tokens in Ether using the ERC-20. And it will cost you between $300 to $500 to have a token in Ethereum. So the coin is a dependent blockchain. The coin is built on the existing blockchain. Are coins or tokens better? Which one is better? Two things to consider here. If I want to do, I will go with the token. Why? Because why I need to build a blockchain and marketing and developers and things like that when Ethereum already has a blockchain exists, and all what I have to do is just to pay this money and put the token there. But there's a fee when there's transaction in a token. So you have to do cost benefit analysis, existing blockchain with the big network, or start from zero, no network, build a network and make a coin of yours. So if you have enough money, maybe you have to go develop your network and build your blockchain and hope that others join your blockchain. Type of tokens: utility tokens, non-fungible tokens, security token, transaction token, governance token, and there is explanation for each one. Crypto valuation, and that's a critical here. Stock market equity or Apple, Microsoft versus a coin. In a company or equity company that trade in Wall Street, they have to report earnings every quarter, every 90 days. They should have report on earnings. If the earning is good relative to the cost, if there's a good profit margin, then the price going up. And if the earnings start to grow in 20%, 30%, then the price will go up. In crypto, there is no earning. There is no company selling products and they have a management and marketing team, digital market. No. Crypto is basically a system that people, a blockchain that people use to transfer money or make transaction. So how we evaluate crypto? Then you have to ask yourself this question: what is the value creation for a proposition? Why we need this crypto? Remember about unique and limited. What's the uniqueness in this crypto? What is the pain point that it resolves? Why we need this? Does it help you with the peer-to-peer? What type of transaction data requires for recording? Basically, what is the block consensus mechanism? What are the costs of verifying or networking? How the consensus mechanism? Is it by coins? You get more coins, or there is a fee? Does this coin reduce these? What type of blockchain is adopted? Permissioned or permissionless? And then what's the marketing plan? The marketing plan is how many people you can have in a network. For example, I think soon in about a year or two, Ethereum should be the biggest network, bigger than Bitcoin, because Bitcoin, you cannot have a token in a Bitcoin blockchain. Bitcoin blockchain is only for Bitcoin users. Ethereum is allowing tokens. As a result, the network is growing fast and fast, but Bitcoin is the first mover. So how, if you want to have your coin, the question is how you can build an infrastructure where more people come into your network. And this has to do with the first question: what type of transaction and data requires to record it? Here, crypto valuation. In my consulting, I do consulting in this business. I have a book, of course. When I evaluate a crypto, I give weight for the network and blockchain 35, 10% for purpose of the coin, 15% for cybersecurity and privacy, 25% for fees and transaction cost, how they do it. And marketing and broad adoption plan is 15%. So transaction cost here, I'm talking about the consensus mechanism. Is it more coin? How much a supply of coin? Or just fees? Crypto network, blockchain, and security from somebody go and steal the coin. And if, for example, one of the security is if you try to get your password 10 times you try and you cannot find your password, then your account is canceled and then your coin will go back again to distribution. Crypto network, you are looking at the security and cybersecurity, the quality of the security and cybersecurity. And finally, we finish a chapter with few open questions about crypto. Why is a crypto very volatile? Why crypto in the stock market is very volatile relative to Apple or S&P or whatever? Why do we have so many cryptocurrencies? Why we have 17,000 coins? how do people view cryptocurrency? So when I did the book, I did a survey, students and people outside the university, and here's what I found that about crypto, and some people think it's what people view cryptocurrency. Some people think it's digital gold. Some people say hedging against inflation. Some people think it's hedging against interest rate. And we did this exercise, I believe last week, that I asked you, what is a crypto? Does it hedge against inflation, interest rate, S&P, and things? Could be hedging, could be going together. So these are the questions, that opening questions. For the question why crypto is volatile, the reason is crypto is not regulated. So for example, JP Morgan, Morgan Stanley, Janus Henderson, US Bank, American Bank of America, all of the Wells Fargo, they cannot use it because the SEC prevent them from using crypto because it's not regulated. Once this is regulated, so the crypto as of now, it's invested by only retail investors who are basically 10 to 20% of the market share. When you regulate that, then you have 80% of the money, which is in institutional companies, join the crypto market, and that will lower the volatility because we'll have a big money move into one sector. So if some people try to sell on this, that does not change a lot the price. Some people own a crypto for personal prestige, wishful thinking, and some people like me for entrepreneurship and innovation. So different reason why people have so many cryptocurrency. Like some people said, I want to have a cryptocurrency because of Bonaparte coin or Smith coin or whatever under your name. Prestige. You like it. Well, and then to be honest with you, maybe when we have email, we thought like only companies will have email account, but then the technology make it easier, so everybody has an email account. I'm not sure if in the future everybody will have a token. Like I got a job, they pay me in a Bonaparte token. You got a job, they pay you in your own token. So everybody got 18 years old, or even 16 or 12. Whenever you start having income, you can create your own currency, put your picture on it and your hashtag, whatever. In God we trust. You can write in whatever you want to write in your currency. You build it the way you want it in your token, and then everybody will have a token, and our token has a price. And then with this technology, if it become to be fast, boom, your salary will go with your token, and you can do exchange easily. The conversion will be costly zero. Okay, how people view crypto: digital currency, medium of exchange, digital gold, speculative asset, long-term computational power such as that's all different opinion. Here is the chapter questions. From where the word cryptocurrency came from? What are the cryptocurrency stops between 26 and 17? You have all of those, and then here's how crypto valuation different than stock valuation. Remember, stock, you have to have earnings. In a crypto, you should have a network, and the purpose unique and limited, and making sense. It has a purpose. Thank you so much, and that's the end of today's lecture. If you have a question, email me. We can Zoom. We can do anything. Hope you enjoy this class. Thank you so much.